Now, viewers, last week, barring Monday, Indian assets have stood tall amid global gloom. Indian bonds defied the broader global bonds sell-off with the central bank's support. Now, despite a shocking worldwide sell-off in debt, Indian bonds held their own as the Reserve Bank of India, the RBI, firmly opened the money taps to prop up the economy. Following the RBI's rate cuts, India's benchmark 10-year yield declined by 4 basis points on Wednesday. And on the other hand, the 10-year yield on US Treasuries spiked by 22 basis points when Trump's massive tariffs went into force. As a result of falling borrowing costs in India, economists predict the country to be able to weather the global trade storm. While Indian assets have performed better than global peers, the risks are still at play for domestic stocks. Tata Consultancy Services hinted at a slowdown that is affecting sales growth. The company's December quarter net income was lower than what analysts had anticipated, kicking off the earnings season on a softer tone. Weakening domestic growth is not encouraging news for tech companies, but with the gloomy economic forecast and the possibility of disruptive tariffs, discretionary tech expenditure is expected to fall due to anticipated price increases. Now, the pharma sector as well, it is expected to take a big hit from Trump's suggested tariff on US imports. Global drug makers felt the impact of Trump's announcement of pharmaceutical imports to the US, despite being a safe haven for investors in times of market uncertainty. The industry is now causing problems as tariffs cast a shadow on profit predictions. The Nifty Pharma Index in India has fallen 16% from its all-time high earlier this year, and further declines are likely ahead unless domestic sales show an unexpected upturn. Broader Indian stocks, though, are at a critical technical juncture. The Nifty is trading above its 100-day moving average on the weekly chart. The index is set to test a trend line that has supported it for decades, following falls below this critical level during events like the 2008 financial crisis, the European debt crisis, and the pandemic-induced slump. The index has surged higher. Now, just last month, before Trump's tariff announcements caused a dip, the Nifty reversed direction from around this support. Once again, the Nifty is circling this crucial support zone.